our bear flag, and maybe something more.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar, dollar. Ching, bling, bling.
Here comes the money.
Hello Adrian, and welcome back to my channel once again. It's 7:30 and 7:30 in my area, which is UTC plus 8, so maybe it's not 7:30 in wherever you are watching, but yep, it's another episode of the Dang Oracle live. So let's go and start with how we always start our show. How is everything going with our COVID virus, and what's the update on that? Okay, let's take a look. And confirmed cases has crossed the 800,000 now. In the US, 825,000 and 45,000 people have died already. People are saying it's not that bad, but 45,000 people who died is, I think, quite bad. So yeah, a lot of people are saying like, well, the flu is worse, blah blah blah. So many people died, but I do think that this is well, if we're not doing anything against it, I think it's going to be a lot more worse. So Spain over 200,000. Italy is nearing that 200,000. Germany nearing the 150,000. But the difference between Germany and all the other countries is, of course, the reported deaths. In Germany, even though they have almost 150,000 cases, only 5,086 people was reported died. So yeah, that's quite low. So let's see how it looks on the chart. Let's refresh this one. I think we are over the 2.5 million now. Yes, we are 2.5 million. And well, yes, we are flattening, but still the slope is angled a little bit to the upper side. So the slope is still not comforting. Although USA is starting to slow down, Spain is still going up, Italy is still going up, France still going up, Germany is starting to slope down, UK still angled very, very much up. So what does that mean? I don't think that we will have a resolution for this month. I think that most countries will be extending their lockdown policy, and yeah, as long as we don't see that the slope is not even flattening, the slope going down, I think that people will keep this measured. And once again, if that is going is ongoing, of course that will affect the economy pretty bad. As you can see, it was already very bad. Yesterday we've discussed the oil issue, and on top of the oil issue, we will be going on, of course, our favorite subject, the stock market, and of course our beloved Bitcoin. Okay, so first things off, let's start off with this article that I saw. So this article is about Ripple. Ripple is actually suing. This is the lawsuit that they are suing. They're suing YouTube. So good luck, guys. Ripple Labs, as you can see, they are suing YouTube because they are saying that things have been posted about the Ripple, about using them as a fraud, a scam, blah blah blah, and so on. So they are filing, and there's no amount disclosed, but 22 pages here, the full complaint, blah blah blah, all the jurisdiction, Ripple versus YouTube. Good luck, Ripple. Let's see if you are going to win this one. But yeah, I think you are a scam. So that's just my personal opinion. Please, YouTube, don't ban me also from the channel. But yeah, good luck, Ripple, with the lawsuit. A couple of days ago, we got our first huge big hack of DeFi. Everybody was talking about it. DeFi, 25 million. One of the projects on the DeFi network got hacked. And what happened is they kind of found out. So this hacker was maybe a good programmer, but he wasn't the smartest person, because they found out his IP address and kind of found his identity. And D-Force basically threatened him to reveal the identity, and he knew that he was fucked. Right? So he sent back the whole 25 million that he has stolen from the DeFi project back to them, although he did convert some tokens into some different into stable coins or something like that. So there is some value lost here. To be exact, as you can see here, around 60k, I guess. Yeah, he lost about 60k by converting his funds, but overall close to 25 million was returned to the D-Force. So that's 2 thumbs up. Good job. And I hope the security, well, like anything, of course, security is still in its infancy. A lot of people still don't know how smart contracts are safe and how they can be, secured. Let's put it like that. Before, if you remember, before wallets weren't even like multi-sig or anything like that. So yeah, there's still a lot of things that have to be adjusted, and we all knew about this. We all knew that this technology is in its infancy, and things will be hopefully, improved in the future, right? But yeah, this hack was good. It got returned, so all good. The project can continue its stuff. Next up, here we got this amazing article by who else? The IMF. Yes, the IMF. What is the IMF saying? The IMF saying is we are hopeful to have a V-shaped economic recovery. Yes, they're predicting a V-shaped recovery. All the rest of the world is wrong. This is going to be a V-shaped recovery, not a W correction, not an L correction. Bye, guys. It's time to buy stocks. I'm just kidding. But yes, of course, they are saying that they are seeing an aggressive V-shaped recovery. They're saying that, yes, we have seen the worst crisis since the 1930s. However, according to the IMF projections, it would be the shortest depression ever. The international body is expecting a V-shaped recovery, the likes of have never been seen. Yes, look, that is what they are expecting. So a slope down of like in the world, let's look at the world, of like -3% and back up to 5.8%. China's just economy just slowed down a little bit from 6% to 1% and goes back to 9%. The US goes to -5.9% and then goes back to 4.7%. The European Union is going to be the one that is going to be hurt the most, according to the projection of the IMF, -7.5 by the end of this year, and then we go back immediately up back to 4.7%. So no issues there, guys. It's all going to be okay. Things will be just fine, according to the IMF. I doubt it. I highly doubt it. But it's funny that, yeah, these are the kind of issues that the IMF is saying. The prediction seems to be optimistic. So yeah, let's see. It really all depends on, first of all, how much money is going to be being pumped into this, because as you know, the FED has been pumping trillions and trillions, actually 7.2 trillions to be correct, 7.3 trillion into this market economy, trying to keep things afloat. But the economy is stopped right now, and like I said, we go over the numbers on the coronavirus on a daily basis, and we can see that every day there are more cases. There's no flattening of the curve for right now, sadly enough, and that, for me, that means we'll probably will have another month like this. So thanks, James Martin, for liking my stream. So yeah, we will have probably a lockdown for another month, and then what will happen with the economy after the 1 month? And this is something that a lot of people don't understand. Okay, let's say we open up everything back, all the shops, Starbucks is back, you can take your Starbucks. Do you really think that we won't have a second wave? Like, people magically this virus is already gone or something like that? No, that's the whole problem. So When people think that everything is normal, they will let their guard down. They will stop wearing masks. They will stop using alcohol. They will stop washing their hands, touching their faces all the time. And what happens? We will have a second wave, most likely similar what was happening or happening right now in Japan and in Singapore, where the health industry and everything went really, really well. They locked it down. They thought it was over. They reopened the economy, and then we have a second wave. And then what? Lockdown once again, most likely, right? Or more subsidies and more corrections once again. So first of all, step one, we haven't seen a slope just yet, like a downtrend just yet. It's not even flattened the curve. That's step one. Step two, well, if things open again, who says that we won't have another second wave? Who knows? So projecting right now that we will have a V-shaped economic recovery, I think it's very, 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 very positive. Let's put it like that. I have my biggest doubts that we will get there, but you know, they can just keep pumping money into this, right? So they can just keep printing money, and yeah, they won't care about the inflation, but the inflation will come, obviously, and also the people will keep paying for this. This bill is going to be mainly held by the people. That's just how it is, right? So what I do think is, what is more realistic is what one of the Twitter guys that I'm following, economic guys that I'm following, is Raul Pao. So you can see this Twitter line on him, and I'll zoom in a little bit, and you can see here he's saying oil is deflationary because it's a limited amount that of oil that we have in reserves on this planet, right? So that's what they call deflationary. Inflationary is fiat money, cash money, for example, because you can just print it and then just put on top of what is supply. So that's what they call inflationary. And oil is deflationary. Similar to Bitcoin, actually. Bitcoin is also deflationary because there's a limited amount of Bitcoin that is only created, the 21 million coins. That was it. That's it. No more Bitcoin can be created other than that. And yep. What he's saying is that soft commodities are looking to follow suit, and the US farmer is sadly going to be driven into bankruptcy, just like Shale Patch the oil. So as you can see here, this is the monthly lock chart of corn. Look at this chart of corn. You can clearly see that this looks like forming like some sort of like a head and shoulders, like, you know, slowing, most likely looks like it's going to crash the support line here and going back to our previous support line. So from 314 to 200, that's a big drop. Let's take a look at soybeans. As you can see here, similar pattern. It's on support right now. And what is the next one? The next support line here is around 600, and then the next support line 450. That's why he's saying 450. Yeah, that doesn't look good at all for soybeans. And then sugar, we have a similar trend, as you can see, head and shoulders type of pattern. If this support line breaks, $10, will it go to $6? That's a 40% drop of the price. And here, this is SCRB, which is the raw industrial material index, not oil or gas. And as you can see here, once again, very similar head and shoulders pattern, support trend line here. It's so yeah, if we make a measure move from here to here, it will drop all the way down here. That is from where is that, 400 to around 220 ish. So another 40%, 50% correction. So as you can see here, I just don't see how CPI or core CPI stays positive. Debt plus deflation is a ticket to bankruptcy, and I tend to agree with him, because if this keeps going, the FED can print money all they want, but if people cannot spend the money, right, there is no need, there will be oversupply of everything, right? That is basically what happened to oil. nobody is using the oil. So yeah, that's it. Just keep stocking, and with these kind of farm products, as you know, the products, how long that you can keep in stock. It's not like oil that you can just keep in a barrel for a long time. And that already went to to minus, not even zero, they went to minus. And yeah, so but this is farming products. So farming products can become the next economic area that yeah, that could be a very, very big problem, right? Okay. Anyways, so one of the economists or traders that is very, very, very well known is William Delbert Gunn. Gunn is actually from he's super old already. He was born in 1878, and he actually passed away in 1955. So he was a finance trader, and he developed technical analysis methods like the gun angles and stuff like that, the spiral charts, hexagon charts, 360 circles. Anyways, so he's basically using geometry, astronomy, astrology, and ancient mathematics to basically predict the cycles of the economy. And the crazy thing is, he has been pretty much correct. He has been pretty good. So for this guy to find all of this, so if you're interested in technical analysis, and you want to learn some technical analysis, you definitely should check out W.D. Gunn, and learn some of those techniques that he is using. It's very similar to Fibonacci. Fibonacci is also a mathematician that is very, very old already. Even on this day and age, we can still apply his methods to what we're doing on the charts right now. I'm using Fibonacci all the time, obviously. So anyways, so what is his projection, right? So this is basically his projection. This is the W.D. Gunn financial timetable, and every year, well, he just figured out that every year there's some sort of a cycle, right? If you've noticed, we have had an economic crash pretty much every decennial, meaning every 10 years we had a big crash. Remember, we had the big crash in 2000. Well, the last one was a little bit earlier, but we had the phenomenal crash at 2008, 2009. So basically, 10 years later, where we're at right now, we had another crash once again. So in economics wise, we tend to have a crash on every 10 years. But this one is actually even more detailed, and this is the financial table. And if you look at 2020, which is where we are at right now, as you can see here, 2020, it says F, panic. It's purple, it says panic, meaning, of course, we have a crash and people are in panic. And what does he expect in 2021? Low stock prices, meaning a complete basically, he's saying in 2021, that's the time to be buying stocks. 2022, H, it means very high stock prices, most prosperous year, most money in circulation, and most speculation. So yeah, according to Gunn, what we should be doing is, and that's what basically what I'm tending to be trying to follow as well, is let's buy stuff next year, because according to Gunn, that will be very low stock prices. And then let's sell in 2022, because according to Gunn, that will be, good stuff, very high prices. So let's go back a little bit and let's see if he predicted some stuff correctly, right? Because we can say what we want. Let's go back into history. And he says here in 2015 and 2016, we had low prices, because you can see the D here. So it's very easy to be checking, right? Oh, we'll go back to that one in a little while. But let's go back. Let's go to our monthly chart first. So he says in 2015 and 2016 we had very, very low prices. And let's take a look. And as you can see here, 2015 here to 2016, and we bottomed. So we had panic in 2015, as he said, panic. So as you can see, crash. And then in 2016 we had very low stock prices, as you can see here. It bottomed here. So once again, crash 2015, very low stock prices in 2016. So crash 2020, very low stock prices 2021. Could it be? Could it be? So let's go back to our charts. Gun, what are you saying? When was the previous one? C, 1997 was panic and 1998 was low stock prices. Okay, let's go. So 1997 and 1998. Let's go there. Do we have data from there? Whew. We don't have data, I think. Oh, we do. Here. So 1997, here we had our panic, and 1998 here we had our crash. But this time it did not make a lower low. It did not make a lower low. We did have a crash, panic, and we did have a major crash here also, but we did not make a lower low. Still, pretty good, Gan. Pretty good, right? Okay, let's go to another one. 2000 was high stock prices and 2001 was panic. Okay, let's see. So let's go to 2000. So this is 2000, the year 2000 here. Let's go through the whole year. So yeah, here he was right. Very high stock prices, as you can see. High. And 2001 was panic. And when was 2001? This is 2001. Panic. Crash. 2001. Crash. As you can see here. Panic. Crash. Okay. Let's go back to our chart. And then what does he say? 2003. 2003, very low stock prices. So let's go. 2003. This is 2003. Yep, you've guessed it. Very low stock prices. As you can see here. 2003. Gun was pretty much right again. How come? Okay, let's go for another example. 2005 was H. Very high stock prices. Very prosperous year. So let's go to 2005. 2005, where are you? This is 2005. And we see, very good. Stock prices keep going up. Stock prices, pretty good. Pretty good. Stock prices, pretty good. And then what are we saying in 2009? Same as A, unemployment, many prominent deaths. Wow. 2009, same as A. So same as extreme low stock prices. So 2009, let's see, at 2009, extreme low stock prices. Let's go to 2009. Oh shit, 2009. What do you know, Gun? He was right once again. Extreme low stock prices. Well, what do you know? Yes, amazing. And then do we have something else here? 2009, yeah, 2009, that we checked that one already. 2015 panic, and 2016 we checked that one also already. So yeah, anyways, yep, I think we went through the most of the chart, the timetable that Gun has predicted. And as you can see, it's a cycle. It's weird, right? Maybe people don't change, and the same psychology of the same things keep happening once again, back and forth every decennial when we have a crash. But yeah, he is predicting panic this year, low prices next year, and very high prices in 2022. So if you believe gun, then you know what to do, guys. So let's jump back into our S&P chart right now. So yesterday was a very important day. Let's go back on the shorter term time frame. And what do you know? What do you know? As you can see here, this is what I've been watching and waiting for the past month or something like that, since we have gone up here from since the major crash and on the 23rd of March until now it's 22nd of April. So yeah, 1 month to be exactly. I've been looking at this and I've been waiting, patiently waiting for this for this rising wedge to be breaking down. And what happened yesterday, as you can see, we broke down on that rising wedge, and I've told you guys, when that rising wedge starts to crumble, then most likely we will be starting to see prices going down on a much faster pace. Right now, as you can see, we went down from this high point back down to here. We got support on the EMA 100 on the 4-hour chart on this blue line. And we are currently on a little uptrend, but like I said, we are most likely going to be rejected by one of these two. Most likely the EMA 21 if we are getting rejected fast, and if we don't get rejected faster, we most likely can get to this blue line here at the moving average 21. But I don't think that we will get that high, to be honest. I think somewhere 27.85 will be our top. So let's see what happens when the New York Stock Exchange market opens in on 9:30. But I do think that most likely we will be seeing a little bit sideways, maybe a little bit higher, but the downtrend has begun, and I do believe that this one is most likely going to get rejected on this point, and we will be most likely going back down to this previous support here at around, let's say, 2,660, something like that, 2,660, before we most likely make more continuation down. Because what I am going to do is most likely take this let's make this a measure move in the middle. Let's be not too greedy. If we take the measure move from here in the middle of this rising wedge down here, we can see that we most likely will be ending up around this zone here, which is around 250, 2,500. So most likely over the next couple of weeks, months, we'll most likely be ending up around 2,500 for the S&P or 250 on SPY. As you can see here, this is the daily, the SPY chart. As you can see, we are building this. We broke down from this rising wedge, and if this line here, if this where am I? Yeah, if we start closing below this yellow line, that EMA 21, then a bigger drop is going to be initiated. And why is this important? Well, of course, like I've said, the correlation between Bitcoin and the stock market has been very high the past couple of weeks, months. So I'm pretty confident that Bitcoin is going to be making the similar move as the S&P and with the stock market. So like I said, I am very interested in taking a short position, because I do believe that over the next couple of days, well, I don't think it's going to be sooner than later. We're gonna have a serious drop. Well, when I'm talking about the serious drop, most likely around $1,000 on Bitcoin, and yeah, I do think that we will get there most likely. Well, let's say in a couple of weeks or something like that. That is what everything is indicating so far. Nasdaq, very similar pattern. As you can see, this rising wedge has been broken, went back up, touching the resistance line once again, and most likely it's just gonna bend over and curl back down. That's usually what a correction always does. So we get a deep rejection and then a small relief bounce, and then it bounces all the way down. So let's go to our Bitcoin chart. Let's go start here with our weekly. So the weekly currently, as you can see, the weekly is starting to turn red already, because we had a little push downwards. Our slope, and that's what the divergence between the blue line and the yellow line is what is important for me. If I see that the divergence or the distance becomes bigger and bigger, it means that there is more and more pressure towards the downside rather than the upside. So what do I think is going to happen? I do think that we will most likely before the halving or something like that, we will be touching or retesting this zone here around the EMA 200 or the MA 200, the simple moving average. So I think somewhere around here is most likely my target of my short. I think it's pretty probable that we will be retesting that area, and even we could even, you know, break it. Of course, if we break it, then things will get bearish very, very, very quickly. But we're not there yet. I would just be evaluating things once we get there, if we get there, of course. But like I said, I'm pretty confident that we are going to make the similar move because the stock market is doing the similar thing. So let's not go there just yet. Let's go here on our 2-day chart. So on our 2-day chart, we have been talking about this for a while now. We have this bearish cross here. This is what we call a death cross between the EMA 55 and the EMA 200. Technically, death cross is when the 50 crosses the 200, but in cryptocurrency, the 55 seems to be working a lot better than the 50. That's the reason why I'm using the 55. And also EMA's crosses, I tend to put more importance into than simple moving averages because they just seems to be, if you backtest everything, don't take my word for it, go and backtest everything, and you'll see that they work better in cryptocurrency than in the stock market. Right, so that's the reason why I'm using the EMA 55 rather than the 50. And well, if we look at the previous bearish cross, I have it here already. We got the bearish cross here, and then as you can see, it took us around a month before we started to break down. And as you can see here, when did we reach our top here? On the 6th of April. We are now the 22nd of April, so we are getting near, you know, we're getting very near to that point. I think that we can have a major breakdown. Is it still possible that we are going upwards here towards one more swipe up towards this test of the EMA 55 or the EMA 200, similar like in the past? Because in the past, as you can see here, what happened is price went down, but it still touched our orange line before it started to dropping dead. Similar here in the past in 2014 when we had our bearish cross here, right here, we had here bearish cross here, price went down and then it went up, touched our orange line and even touched our blue line or our EMA 200 before it dropped dead. So I'm going to add the EMA 21 on this because this is what I wanted to show you guys as well. What happens is price did a bearish cross, it retested the bearish cross, and then price basically started to be pushed down below the EMA or below the yellow line. And as you can see, once it started getting pressured under that yellow line, it was hovering around that yellow line for a while, and then it broke down. So similar pattern we can see here on our second example, bearish cross right here, then price went up and touched the orange line, then it got pushed back down, and then as you can see here, it touched it below. Wait, maybe I'll remove this one. It stays below the yellow line. Oh, come on, delete it. Can I delete it? Yes, I can delete it, right? Delete. Okay, so as you can see, price hovers around this yellow line, the EMA 21, and then boom, it dropped dead. So let's go to what we have on our current situation. Our current situation is very, very similar. We have our bearish cross right here, then price goes up and retest. Well, this is sort of like it's near it doesn't necessarily, obviously doesn't necessarily have to touch it. There's still a chance that it touches, right? So I'm still waiting for that. I'm really not 100% sure on that, but I do believe that this could potentially be it already. That could be our bearish cross retest. And as you can see here, price is hovering around this yellow EMA 21, so this can just hover a little bit longer and then once again drop that down. That is basically what I am expecting over the next week, something like that. It could be, but I still think that it's most likely going to be sooner than later, right? So let's go to our daily chart. As we can see here, what happened is, I told you guys, it went down below and closed below that green box, and for me that was the signal that most likely we are going to have a bearish and a continuation of our bearish trend. That's why I was very interested in shorting. As you can see here, we broke back up above that, but we are currently struggling right now to be re-breaking that downwards channel this time once again. So like I told you guys yesterday, we are forming a bear flag. As you can see here, this is a bear flag. How do you look at it? Well, you look at it like it's like a pole down, and then you have the flag here. As you can see, this is the bear flag, and I told you guys I have already started to short around the 6.9k. The reason was because it's very possible we could get rejected immediately, but there's also a chance that we push back up one more time and retest that bearish cross that we have right here. Oops, that is the wrong symbol here. This bearish cross right here, which is around the 7,000 area. And what happened yesterday, it is touching, as you can see here, the top of that bear flag, basically, right? So can it go a little bit higher even? It still can, but this looks more and more like a rejection with all this pressure on the top. So yeah, I think that was pretty much it. We went to 6,987, as you can see, very near 7k, and that's where basically I kind of expected price to get rejected. Doesn't mean that we cannot. There's still a bit more space to like go up slowly over the next day or something like that. But like I said, there is so much pressure right now coming down, and the most important thing that we can see here is that if we get a depth cross, that is the green line crossing down the purple line, then most likely we will get a big dump from there. Because right now, as you can see, the green line is pretty much like kissing the purple line, as you can see here. So as you can see, yeah, so there, if the price stays below the EMA 55, of course that is going to create a bear cross, right? A death cross. That's what they are calling it, between the 55 and the 200. So if price stays below 6,972, then we will get that death cross over the next 8 to 12 hours, I think. Yeah, 8 to 12 hours, depending on how hard we go down. So this is our bear flag. What do we do with our bear flag? Well, what we can do is take a measured move from this bear flag, right? So what we do is we take the top of the pole, which is something like this, and then we make a measured move from that pole down. If, let's say we break from this point here, and what do you know? We are going to be reaching this critical support line once again, the 6.4k area. So depending on when we break, let's say if we break a little bit sooner, obviously the price is going to go down a little bit quicker. But that's basically how we can take a measured move from this bear flag. And to be honest, this looks very much like a rejection right now. As you can see, this candle, it's starting to smoothen over. And like I said, if we keep getting pushed down, and then from there, and once this breaks here, so we have already 1 touch, 2 touch, 3 touch. I think the next time we touch and break below and confirm below that green box of destruction, then most likely we will get our drop. Not saying that we immediately go and have a red candle all the way down here, but most likely we're gonna have a bounce around here at the 6.6, then make a small bounce up, and then head down towards lower prices. That's basically what I am expecting. Doesn't mean that it has to be today, doesn't mean that it has to be tomorrow, but pretty soon. Well, That's what everything is pointing me out to. Why very soon? Why very soon? Well, very soon because of the following. Let's take a look at the 12-hour. This is the 12-hour stock, and as you can see, every time we have touched these are all the tops, local tops or major tops. Every time we touch there, we topped out, and as you can see, we are trending. Our stocks are pointing all the way down, and there is still quite a lot of space before we are potentially going to make a bounce. So that's that doesn't look good. As you can see here on the RSI, we pumped back up, and that was our weak ass bump push. Like I keep saying, we most likely get our push during the retest of that bearish cross, and that is what happened, as you can see. But we are currently getting rejected from the EMA once again, and this time most likely we'll be breaking down and going into the bearish control zone. Something that I have been telling you guys for a long time is the historical volatility percentile. As you can see, it has been contracting, and this was the $1,000 move. And like I said, if this goes to zero, then we will have another $1,000 move. And right now it is only at 4, so that's insanely low. So this can literally happen the next couple of days, in the next before this looks like before. I don't think it's gonna go all the way to the apex. That's why. And the apex is, funnily enough, on the 11th of May. Hi William Fornes, thank you for liking the stream. So yeah, the May 11 is the halving date. So yeah, it's going to happen before the halving date. Yeah, this looks like before the month. So yeah, this week, next week at latest, I think. So yeah, that's basically what this is telling me. So let's go there. So that's that, and then what do we have on the expected move charts? Let's go to the expected move charts. And as I told you guys, what are the two most important zones for me? One would be here. That would be around the 7.125. That would be if we break 7.125, we most likely have a leg up higher to like 3.350 ish, something like that. That would be my my thoughts. But if we close below 7.125, in the medium term, I don't think anything changes. And then of course, if we close below 6.7, that is something that I've been telling. It is death and destruction. So let's go back to our expected move chart. The first standard deviation on the top side right now is 7,077, which means in the next 12 hours, most likely we will see no resolution at all, because if we are going and close the candle tomorrow above 7,077, nothing much. If we break down, what is the bottom of the first standard deviation on the bottom? The first standard deviation on the bottom is 6,822. What does that mean? Well, if we go back to 6.8, nothing changes, because that doesn't break our green box as well. So expected move charts is basically telling us that today, most likely, nothing dramatic just yet, right? But who knows? This can change very quickly. But that is basically what the math is telling us. And okay, another thing is, as you can see, the slope is on the downside, so we have a higher probability that we are going to head to the bottom side of the standard deviation, right? And we just had our 12-hour candle close just now, which actually looked quite bullish, as you can see. This is a quite bullish 12-hour candle close. But yeah, even although it was a bullish close, mathematically, statistically, we are more probable to be going down rather than up. Let's go to our 4-hour chart and see how things look on the very short term. Very short term, we see a small so yeah, price has been going through this flag that I have, this channel that I've drawn, and as you can see here, we are trending a little bit down, but it can easily just go down a little bit here and then push back up once again as a support. So this doesn't tell me that much. If we look at the stock, we can clearly see that it is still pointing up, so there is still some chance that we get a little bit up higher, but it can also just come to this previous resistance right here and then get rejected once again and then curl back down. So that is, for me, a more probable scenario that we will get rejected pretty soon, I think. But yeah, not, like I said, not really. I don't think it will just happen today just yet, although if you look at the horizontal volatility percentile, it's starting to get very low as well on the 4-hour chart. So if we get the signal on there on the 4-hour chart, we should get like a $100 or $200 move. So that's very, very tradable as well. If you are a scalper, that's very tradable as well. So let's see what is going on. But for now, of course, I'm very interested in a big position on a short in a shorting position, because I do believe that things will be looking very, very bad very soon. So one thing that I wanted to show you guys also as well is the following. The following is actually on the 4-hour chart, and let's remove the other colors. Maybe wait, I'll just make it on the new chart so it's more clear, right? So let's duplicate this one and go to the 4-hour chart, and then let's remove everything, and then let's remove all of this as well. Doom, 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 doom. There, squeaky clean, squeaky clean. And then we just add the indicators that I want to add, and that is the EMA, the two EMAs that I wanted to show you guys, and one would be the EMA, of course, the EMA 55, because we are talking about death and destruction. 200. So the EMA 55 and the EMA 200, those are the two things that I wanted to talk to you about, because those are the death crosses. So maybe let's make it a little bit thicker here, and here let's make it thicker as well, so it's a little bit more clear. Okay, there you go, there you go. And then okay, so this is basically what I wanted to talk to you guys about. So you remember when we had this bull trap, bullish cross, the blue line is crossing over the orange line, and one day later the blue line the bear smacked it back onto your head, the price went back down, and we had a death cross once again. And then once again we got our bullish cross here, and what do you know, price went up, as you can see, quite nice pump, but not, and we all thought that this would be having some bigger momentum and bigger higher. But what happened is that we got a lower high. So nothing that special, sadly enough. And then now what we're happening is, as you can see here, we are trending. It's not there yet, like I said, and maybe in the next 4 to 8 hours, depending on the price action, if we keep our price below 6,971, we will have, another death cross. So what did I wanted to say? We had a death cross, the bull cross here, death cross here, bull cross here, death cross maybe here. But if you look at the where is my chart? Here, our CME chart. That is something that that I'm always looking at. And as you can see here on our CME chart, the colors for that is the EMA 55 is green, and the EMA 200 is purple. So we are just looking at the green and the purple line. So let's remove all of the rest so that we can see it more clearly. Okay, there we go. So as you can see, when we had all of that bullshit happening, when did the green cross the purple line? Never. Never. We never had it. So what does that tell me? That tell me, of course, that we are in a bull trap mode and things are not looking good at all. Not looking good at all. That's basically what it is telling me, because I of course take more serious matters into CME chart than on the spot price chart. And as you can see here right now, as you can see, the price on the CME chart is actually quite bullish. As you can see, the very good close, and then the next candle is starting to push above. So it wouldn't surprise me to hit the next target around the 7.1k area or something like that. 7.1, yeah. I'll just add a little bit to my short position right there if we get there tonight. So I'm not really concerned, but for now, yeah, nothing is happening, of course. Then a second chart that I'm always looking at is the Bitcoin Japanese yen chart. Why? Because it has been a front runner of all the action. So let's do the same thing on the 4-hour chart and remove all the other moving averages. And here we are looking at just the green line and the purple line. And as you can see here, we have that bullish cross. We have that death cross the 1 day later, right? Then we have that bull cross once again. And what do you know? Here, we already have a death cross on the Japanese yen chart. So what does that tell me? Well, that tells me that, well, we will have a death cross most likely on the spot price chart, because the Japanese yen chart has been, like I said, has been front running everything. So on the Japanese yen chart, we already have a death cross. On the CME chart, we never had a bullish cross. And on the spot price chart right now, as you can see here, right now we are leaning towards a death cross, leaning towards it, but it has not happened yet. But Japanese chart is telling me that it's going to happen, because they are a front runner of the chart. So that's it. Conclusion is this: bad times are most likely coming. Most likely we will have a big drop. Well, not immediately, but things are not looking good. Big drop in the S&P, meaning also a drop in Bitcoin, most likely by the end of this month. Japanese market is telling me that most likely we will be going to our previous support line, around the previous weekly support line, which is about around, where was it again? Here, between 5,000, is that the weekly chart? Yes, between 5,500 and 5,700. That's most likely the target, 5.5 to 5.7, depending on how fast we go down. But that would be the area that I think we will have at least a very decent bounce from there. Maybe that will be the spot where we are going to bounce before the halving and make a little positive halving run. But I do think that we will be retesting that area by the end of next month. So that's pretty macro, but yeah, that's what the charts are telling me. And what are we going to do? We are shorting everything in the market right now. I'm short on everything. Short. Except for gold. I'm not shorting that one. Gold, I'm longing. But I haven't started my long position just yet. I'm still waiting for some confirmations before I'm longing on gold. But on all the rest, S&P, NASDAQ, Bitcoin, short. That's where I'm at right now. So, how do we end this? Well, maybe we'll still have a little push towards a 7-point-ish, maybe 7.1 if we're lucky. We'll be definitely adding more shorts to that position right there. Currently my average position is around 6,950. That is my shorting position right now, because I added a little bit during our pump up at 6,980. A little bit, yeah, there, and I had a little bit on 6,900, so I'm averaging around like 6,950 right now. That's where my shorting position is. If it goes to 7.1, will be adding a little bit more. But it's very possible that we won't get there. If Yep, and I'm waiting for opening of the stock market at 9:30 and see how it goes, and then yeah, waiting for that death cross that I'm expecting is going to happen on the spot price on Bitcoin, and then things will be starting to go down like a domino effect. That's basically what I'm thinking. So, see you guys tomorrow, 7:30, UTC plus 8, Facebook Live, YouTube Live, whatever you prefer. And until then, stay home, stay safe, and of course, stay COVID free.